Hey, what's happening, guys? Dan Darrow here with another Options in Play video update. So, wrapping up Friday, obviously it was a pretty eventful day, huh? With the the tariffs kicking in last night, headlines that people didn't really know which way they would go. So it's been kind of a rocky session, continuing what has been a pretty volatile week. So, uh, earnings. Uh, Earnings do sometimes take a back seat weeks like this when it's very headline driven market, right? When people are kind of like basket buying, basket selling. So earnings can take a little bit of a back seat. So what I'm going to be watching this coming week is if maybe the market kind of tightens up a bit, digest some of the news from this past week, and then people start to focus on earnings again. So that'll be definitely something to keep an eye on. We certainly aren't lacking for big names. So as you'll see, there's definitely some big names still coming up. Um, so yeah, let's jump into it here. So actually, before the open Monday, there's not a single company scheduled, but I guess you're gonna have to be on watch for any more China tariff trade talk headlines, right? The biggest headline of the week came Sunday night from Trump's Twitter, so that's probably what you're watching this week. But as far as earnings, nothing scheduled Monday morning. After the close Monday, you have Take Two, so they're looking for about 9 points. This is the last of the gaming stocks report, though. So EA and Activision both already reported. Both were a little bit smaller movers this quarter. Last quarter, they all three were very volatile. This quarter, a little bit less so. Um, the plan originally coming into this quarter was because Activision was first, just focus on that. After the way things are played out, probably still going to be the idea. If there's going to be a big move in Take Two, odds are Activision will respond to it. So there's already a position in that. So just stick with Activision. We'll focus on that. Also, after the close Monday, Tencent Music. So this is the second quarter um, that it'll report. First time it got hit. They're looking for about $1.75, and the first quarter it seemed okay, but I guess it was more of like a sell the news event. Stock has been leaking lower. Obviously, this past week it's kind of under pressure with a lot of the China names. I still feel like it's a decent speculative long. Um, but the problem is, it basically needs to get back through like 18 and a half, even really 19 to really kind of get that momentum going again. So, it is certainly more speculative, but I do feel like there's still some potential there. Um, what Tencent Music and actually as I go through earnings here, you're gonna as you realize a lot of big China names is um, the big question is going to be, are people going to reward these reports with all of like this headline risk, right? I mean, like that's going to be like the $1 million question because Tencent Music will be the first of the China names, but you're going to see that there's going to be a lot of other ones. So it's going to be a bigger question mark for a lot of these guys, and at the moment I'm a little bit more hesitant, but we'll see how the week plays out. Tuesday before the open, CyberArk. So this one fits the bill of the trending stock trade, right? It's priced in at about 13 and a half. It's been probably the top cybersecurity name, coming off two really great quarters in a row. Stock has been impressive, hasn't had any pullback. Problem is expectations are higher, right? And that might set up more of a sell the news event, right? What's worked great on these types of setups has been waiting for possible pullback. So if it's not broke, then don't fix it. So I guess that's what I'll be watching with CyberArk. Ralph Lauren. We're gonna get some retail this week. Ralph Lauren will be one of the first. Looking for about 10.5. It's the first apparel name to report, so there could be some higher volatility, right? So it's like PVH. I guess you had VF Corp not too long ago, but they're one of the first apparel names. It moved 14 last quarter, and it moved 12 the quarter before that. So options aren't too bad. Um, Still, I feel like if you're thinking about playing this, probably need to get the debit or risk down, just because you might not see a huge move above the 10.5 that's priced in or so. I don't know which direction to lean. You know, it's retail is kind of hit or miss, but tends to be pretty volatile. So maybe like a volatility strategy, but some way to get the debit or the overall risk down on that one. Tuesday after the market, New Relic. So I don't know if you guys are familiar with this. It's kind of an under the radar top software name. You can see what's interesting about it is that you know, it's kind of like an explosive high growth name that's come back. Still hasn't put in a new 52-week high like some of its peers, and it seems like it could be in position for that. It's pricing in 10 points. You know, if the numbers are good and it gets up into the teens, I mean, there could be a pretty substantial pent up breakout here. So, you know, it's not the same setup as a lot of its peers. This one does seem like there could be some upside potential, so that might be one to look at like a speculative bullish bet on. Tilray, you know, it's interesting to talk about, but not so interesting to really trade anymore. I mean, this thing hasn't been able to get through any of its moving averages in months. It's priced in 6 points, and it's not really an earnings story. The chart looks terrible, obviously. 6 points does seem pretty expensive too for options, considering it really hasn't been that big of a mover on earnings. So I'm thinking more of like a wait and see approach on this. You know, see what the numbers look like, see what the action looks like, and then make a judgment call after that. Wednesday before the open, here's a big one, Baba. So it's priced in about 11 points, but it's kind of a tough backdrop to report results. You know, it's just with the headlines, just, you know, consistent, just negative trade headlines. I mean, this is a name that you can see was under pressure all week on them. So it broke the recent really, you know, had a really nice strong uptrend, broke that this week. It hasn't been that big of a mover on earnings recently. Okay, so you have to factor that in as well. I mean, it's priced in at 11, but it really hasn't moved much more than that over the last like 3 or 4 quarters. So, you know, you got headline pressure, options that are priced basically at the top of its average range. It just seems like an avoid. You know, as much as I feel like it could move. I mean, the options, I don't know if it leaves a lot of room on them. All right, so I'll look at it, but not sure that I'm gonna do anything with it. Macy's. So the pricing at about 2.25. It's the first brick and mortar name to report, so should have decent action. The chart looks terrible. Stock is at its 52-week low. Seems like it wants to go lower, but you know, there can be some unpredictable swings in these brick and mortar names. So maybe like a skewed strangle, like favoring the downside. You know, maybe like 60-40 or 75-25 skewed to the downside. But you know, just have a little upside on in case you get like that really crazy surprise move higher. Wednesday after the bell, we have Cisco. This is another big name. So it's priced in about 270, and this stock was just the definition of strength up until about 2 weeks ago. Just an unbelievably strong, consistent trend. So it's pulled back, which actually presents a pretty interesting setup going into earnings because the last few quarters have just been real solid. And if they can turn in another one of those solid quarters, I mean, there could be a quick snapback print. So like just a, you know, like same idea. You know, when a stock originally breaks the trend, you're looking for a quick snapback into the trend. Well, this is like the same idea, but just as a catalyst trade, right? So in this really aggressive, strong trend, had this reasonably sharp pullback ahead of results, and if earnings are good, you get like a quick snapback into the trend. So like above 56, 57 area. That's what I'm thinking on Cisco. Farfetch, recent IPO here. Priced in about 3. It seems kind of interesting. I haven't traded this one before. It's pulled back after last quarter's move, actually giving back all those gains, and it's been in a reasonably tight range. So I mean, it's not super tight, but reasonably. Um, you know, I feel like options might be a little bit underpriced on this. So it moved over 7 last quarter, and it's only priced in 3. And you know, there's plenty of room higher, and then the next key area underneath isn't until like the 19 or 20 area. So it seems like there could be some room there. So maybe a lower debit strangle on Fitch. NetEase, another China name. So it's priced in about 23. Was one of the better performing Chinese names just up until this past week. Common theme here. Um, Again, falls into the same kind of category as Baba. It's just, um, tough with the headlines. Plus, this one hasn't been as volatile around earnings for the past couple quarters, so a little bit more hesitant with it. Um, Thursday before the Open, Bazoon. This is kind of following the same idea. This is another China name. Um, the thing with this is that the option's actually a little bit better priced. So they're looking at about 4.5, and there's been some quarters where it's moved well above that. Like 2 out of the last 3 quarters, it's had moves that were above that. So not bad from an option pricing point of view. So one of the China names that might be worth taking a shot on, even if the headlines are still kind of hanging over all these like next week. Walmart, another big report. About 4.5 points is what it's expected. It rolled over, and it's going to be, basically at this 100 range as it goes into earnings. So it's coming off a strong quarter, which obviously didn't have any follow through just up until the past month, right? It seems like it's a solid setup to move more than what's priced in. It's basically above 100, which is a key level, right? And kind of in like a tightening pennant formation. It still hasn't retested the high from November, which is above 106, right? Through that, you have 110. And, a failure at this point would probably put it down in like the 200-day range, so like 96. So, it does seem like the setup favors the bull side more, where there's more upside versus downside, but still seems like the options are reasonably priced versus the potential in that one. Wix, just incredible run, and what's interesting about this is that they actually missed last quarter, but I mean just a fantastic buy the dip, held the 50-day perfectly, and it's just been like a rocket ship. So. Falls into the category with a lot of these software names. I mean, especially last quarter because they missed and had weak guidance, so the thing got rocked. So don't have a ton of confidence being bullish after they missed and guide lower. So maybe wait for a dip and see if it repeats the same pattern where you can get it, snag it down maybe around the moving average, and then go long for like a swing. Thursday after the close, it's a chip night, semi night. So first off, AMAT. So looking for about say 2.5. There've already been like a bunch, if not all, of the semi suppliers. So I'm not really sure how much surprise is left in this one. Couple the fact with the chart really doesn't look very compelling one way or the other. Maybe if it was up around 44, it'd been a different story. But down here, it doesn't really look interesting in one way or the other, and there's may not be a whole lot of surprise left. So probably an avoid. Nvidia, big one. It's priced in at about 15, and obviously it benefited last quarter because it had such an ugly guidance cut prior to them reporting. This time around, obviously there hasn't been any guidance, so options aren't cheap. But at the same time, it looks like it should be set up to move more than the 15. I mean, just on the downside, you could be looking at a move into like the low or mid 140s. That's about $20. On the upside, there's a really obvious gap to 185 area and 190 there. So it's priced in at 15. Seems to be visibility for 20 plus though. So I like the idea of a strangle on this one. Baidu, another Chinese name, right? I told you it's a big China name. China Tech Week. So it's priced in at 9 points, and if this isn't the worst of all big cap China names, it's easily top 2. So it's working on a break of its 52-week low. Just looks terrible. I mean, the thing with Baidu is that this is about as make or break of a quarter as there is, right? I mean, this is sitting right above its 52-week low, and further out I go, you can see that there could be a lot of downside underneath this, right? Could be a lot of downside here. So, yes, I talked, prior about avoiding a lot of these Chinese names because of the headline risk, but this one is a really interesting setup. And at 9 points, the options do seem pretty underpriced. Just based the fact that, I mean, this week alone it was down, almost like 13 to 14, right? And it's at the bottom of support. There's a ton of room lower. It's been lagging by a mile, so 9 points is what's priced in. But this is one that really stands out to me as one that there could be potential for a bigger move. Pinterest also Thursday after the close. So First Report is a public company. Had a really fantastic move out of the gate, pulled in, has been in a nice tight consolidation around 29 to 30. Seems like it's looking to turn the corner, and First Report can be a little bit more volatile. Sometimes crazy action, sometimes no action at all. It's really tough to say. All I know is that technically it does seem like it wants to turn the corner, so I think it's, you have to view this more from a bullish lens. And right now the open trade is a calendar spread, and I still kind of like that idea, thinking, longer dated options to try to catch that move up into the high 30s, 40 area. Whereas near term expensive options might be worth using those to offset that longer term position. So that's the current trade, and I still like the way that that's setting up. Friday morning, Deere. So the big industrial, actually one of the only industrial reports of the week. So pricing in about 8.5, and it's gotten hit this week. I mean, it's one of those names that is sensitive to these tariff headlines. Dropped to the 200A. Options aren't priced too bad considering it's had some big moves. At the same time, there just hasn't been any direction on this stock. It's just there's just been no momentum, no direction. It's tough to figure out which way to lean. And at 8.5 points, there just might not be a whole ton of room on that. A lot can change between now and Friday morning, the way this market's moving. So it could be a different setup by the time we get around to then. But if it's down here around the 200A prior to earnings, thinking might just avoid. If the setup changes, then maybe we can reevaluate. But technically doesn't look great. Fundamentally, doesn't seem like anything special. Options aren't that low price where it's like, okay, this is really really worth it. So it's definitely an interesting name, but the setup isn't that interesting at the moment. All right, so that's that. So you can see that even though we are now getting through earnings season, there's still plenty of names, some potentially big movers, some high profile reports. So still lots going on, and now you throw sprinkle in some volatility and some headlines, and probably shaping up for a pretty busy week. All right, so have a fantastic weekend. Rest up, relax, get off Twitter. Don't follow the headlines, and we'll come back Monday and we'll get after it. All right. So have a great weekend again, and I'll talk to you all then.